Yo, so when I'm day trading, I like to look at the 15-minute chart for my entries. I like to look at the 4-hour chart for my major areas of value. And I like to make sure I have a very positive reward to risk ratio. And a few years ago, I combined all of those qualifications into a rules-based strategy. And after doing that, I combined that strategy with an entire day trading process I use every single time I'm going to be day trading. And in this video, I not only want to share with you that full strategy, but that full process that I personally use anytime I'm going to be day trading. And at the end of the video, I'll also be sharing with you what I'm looking at this week in terms of my own day trades, the pairs, areas of value, and entries I'm going to be looking forward to moving through this week. And that way you can see this entire process in action from beginning to end. And hopefully that can help you to master what I consider the most applicable day trading strategy in any market. So if that sounds good, go ahead and click that like button for me. Go ahead and subscribe if you are new. And I'll catch you on the other side of the intro and disclaimer. Welcome back. And in case you're brand new, my name is Steven. I've been trading for about a decade. And again, in this video, you're going to be learning my entire day trading process. Let's get started. Right now, we're looking at the Aussie dollar. The first step in this strategy is going to be finding prominent and major areas of value on the 4-hour chart. Now, unfortunately, this is one of the most subjective parts of this strategy, and there's no way to have absolute set in stone rules for identifying areas of value and levels of structure. So for that reason, I'm going to be showing you exactly what I look for right now. Keep in mind, this is something you will get much better at with experience. So for me, if I'm looking at the Aussie dollar right here, where price currently sits, I know for a fact price is going to do one of two things. Price is either going to go higher or lower, right? That's the only two things price ever does. So with that being the case, the questions I have to ask myself is, if price goes higher, what is the most prominent level of structure that I see? The rules I have for this, although it can't be set in stone, this is exactly how I draw the zone. But the rules I have is that I look for a recent area of structure that's been tested multiple times. That area almost obviously is right here. We have a level of structure that has pushed price around multiple times. So if price heads higher, I know this area, and it's not just that straight line, it's actually a bit of an area, is going to be an area I look at for possible sell trades. Hopefully you're following along. The other thing price can do is what? Price can push down. And if price pushes down, where do you see as the most prominent and most major area of value price is going to hit? Hopefully you were able to point this level out right here. We have another level that has very obviously pushed prices around in a major way throughout the past. With that being the case, I know if price pushes lower, I'm going to be looking in this zone again, not necessarily that one straight line, but in this zone for a possible buying opportunity. And I just wanted to touch on how I'm going to be identifying major levels of structure before we go over the full strategy. But again, towards the end of the video, I'm going to be going through every single currency pair that you see over here to the right. And I'm going to be breaking this down on each of them and showing you how I'm spotting these levels. So that way you'll get some more practice in towards the end of the video. And hopefully that'll get you to a point of better understanding how to draw these levels on your own. But now let's go ahead and take a look at an example of the full strategy so I can break that down for you. Now we are on the euro yen and we're looking for major areas of value from where price is right now. So here's price. Remember the question we ask ourselves, price can do one of two things. It's either going up or going down. If it goes up, what's the major area of value that you see on the chart? Hopefully you were able to point out this area right in here. This is the major area of value that I'm seeing, considering that this is the area that pushed the market around the most. And now what's the second thing price can do? Price could go down. If price goes down, we do have a prominent level that's way down here. But if we wanted to trade before that, there's actually another level that I see, and that is right in this area. And the reason for that is because this also is an area of support. Market was supported from that area multiple times. That's been tested multiple times as support and as resistance. So we have two areas of value that we're looking at. The next thing to do is to drop down to a lower time frame, the 15-minute chart. Like I said, that's where I want to take my entries for a day trade, and I'll show you what we're looking for once we get down there. So for now, let's go ahead and push the market forward. And we do, in fact, get into our area of value, the resistance level we're looking for possible sell trades from. So now is when I would be dropping down to a 15-minute chart, and I'm going to share with you my exact entry pattern for this strategy. And that is looking for a candlestick pattern that is followed by a candlestick that closes below the candlestick pattern within the next 3 candles. And that last part is just for added confirmation. So let me explain that one more time, and while we're looking at the chart. So this is a shooting star candle. I have a very simple set of rules. I don't really care what you call the candlestick. I use a Fibonacci retracement, and I pull it from the top of the wick down to the bottom of the wick. And if the entire body of the candle is below the 38.2% retracement, I count that as a shooting star. So in this case, this is a shooting star candle for me. That is the candlestick pattern I am referring to. Now, what I want to see for added confirmation, since we are on a lower time frame, down here on the 15-minute chart, what I want to see for added confirmation is a candlestick that closes below the low of that shooting star candle within the next 1, 2, 3 candles. Now this is happening within the next 2 candles, so obviously that rule is met. So for me, again, we're waiting for prices to get to our area of value that we've pointed out on the 4-hour chart. We're waiting for a candlestick pattern. In this specific case, it's a shooting star candlestick based on my 38.2% rule. And within 3 candles, we're waiting for a candle to close below that candlestick pattern low. So since we have that right here, this would be the perfect scenario for a possible trade. And I would be placing an order just like this. I'm going to share with you the risk to reward ratio as well now. So at this point, I would go ahead and place the trade. My stop loss would be 1 ATR. The ATR is the average true range indicator, and it essentially gives you the average of the last 14 candles to help you stay in line with the volatility of the market that you're trading. You can see that indicator up here, and you can find it just in the indicators tab very easily. But right now, the ATR is about 8 pips here on the shooting star candle, which is the ATR that I use. So I would come to the top of that shooting star candle. I want to go above the high of that candlestick pattern by 8 pips. So we have 6 up to the top of that. That would be 14 pips after adding 8 to that. After we have our 14 pips, I like to have a 1.7 to 1 reward to risk ratio for these types of day trades. And the reason for that is that we are looking at structure levels on such a high time frame, being the 4-hour chart, that these levels have the ability to push the market around a good bit, like a decent amount. So when we combine that with this candlestick pattern, hitting a 1.7 to 1 reward to risk ratio really isn't that difficult. I normally shoot for something like a 1.4. And if you're wondering, the reason I don't go for a 2 to 1 is because throughout my testing and trading this strategy, using a 2 to 1 made the win rate much lower, to the point that the ROI over a long period of time decreased. So a 1.7 to 1 is the highest ROI I saw in terms of the reward to risk ratio when trading this specific strategy. So in this case, this would be the exact trade setup. And let's go ahead and click play. Prices pushed up a bit, then pushed down, and eventually, as you can see, came down enough to hit our targets. Now, before we even continue, obviously this strategy does not win all the time. It's just easier to point out winning examples. We'll look at a couple of losing examples as well. But now I want to go take a look at a bullish example of this strategy to make sure you understand all the concepts involved. Here we are now on the Euro Swiss. Prices, as you can see, are right here, and I actually have to zoom out a bit to find a prominent and major level of structure. And the reason for that is whenever I'm looking for these levels, I'm looking for a recent level that was broken that's also been tested multiple times. So when I zoom out, I want to see if you can spot that on the chart. So what is a level that just kind of stands out to you? And there may be a couple of them, that's fine, but I'm going to look at the one that price is most likely to hit first. As you know, we're doing a bullish example this time, so we're looking for a level of support. What that means is that we're looking for a level below price that price will hit if it pushes down. So where do you see that level? Hopefully you pointed out this area right here. This is a zone I would see as a major level of structure. And the reason is because it's the most recent high that price broke compared to where price is. I know price broke above right here, and we broke above this little high as well. But in terms of where price is, right here, the next level we will hit if price continues lower is going to be this level that price broke, right? And it's also a level that's been tested multiple times here. So with those two factors coming together, this is the zone I would draw out in this specific scenario. And this zone would be the area of support I'd be looking in for possible trades. This is my 4-hour chart. I've got my area of value, the major level of structure I'm looking at for possible trades. Let's move the market forward and discuss the entry reason. We have price pushing down, and now we have price getting into that zone. Next up, what are we going to do? We're going to drop down to the 15-minute chart. What are we looking for on the 15-minute chart for a bullish scenario? For a bearish scenario, it was for a bearish, for a bearish scenario, we were looking for a shooting star candle. So in this case, we're going to be looking for what I consider a hammer candle followed by a close above candle within the next 3 candles. So in this case, do we have what I consider a hammer candle? Well, my rules for this are the opposite of what they were for a shooting star. I'm going to be pulling a Fibonacci retracement from the low of this candle up to the high of this candle. And remember, if the entire body of this candle, meaning the open and the close of the candle, the whole body is above the 38.2% retracement, I consider this a valid hammer candlestick. So in this case, we do in fact have a hammer. And do we have a candle that closes above the high of this hammer candle within the next 3 candles? That would be 1, 2, 3. Obviously, the very next candle right here closes above the high of that hammer candle. So we have a valid trading opportunity that would look something like this. We're going to do the same thing. We're looking at our hammer candle to find the ATR. If we go up here, you can see that ATR is about 5 pips right now. It's actually 5.7. So I'm going to do 6 pips below the low of our hammer candle. So down to our hammer candle is 8 pips. That's going to be a 14 pip stop loss because we're adding 8 to the low of that candle. After we have that, remember, we're looking for a 1.7 reward to risk ratio for this specific strategy, or at least I am, because I found that is what works best for my style. And in terms of the ROI I'm looking for out of this day trading strategy, let's click play, see what happens. Price bounces around and eventually does in fact push up enough to hit that 1.7 to 1 reward to risk ratio. Now, before we continue, I want to break this entire strategy down in an acronym that I call CEST. Those of you who have been around the channel for a while, you know exactly what this means. But for those of you who are new, this is what every strategy I create and trade consists of. It consists of C, which stands for conditions. The conditions of this strategy are very simple. We're waiting on a 4-hour chart to show a level of prominent structure that we can use as an area of value for possible trades. The other condition is we're waiting for price to get into that area. After the C of this acronym, we have E. E stands for entry. The exact entry we're using for a short trade is a shooting star candle, defined as I did earlier with a Fibonacci retracement from high to low. The whole body has to be below the 38.2% retracement. That's not all. Since we're trading on a low time frame, I want to see confirmation after that. So I not only want to see that candle. If we had that candle, right, and then we had a candle that kept pushing up, I would not be involved in that trade. Instead, I want to see that candle, and I want to see a candle that closes below the low of that candle within the next 3 candles. If it happens on the 4th candle, do I take the trade? No. These are as set in stone of rules as I can possibly have. So the entry, again, for a short trade would be a shooting star candle followed by a close below in 3 candles. For a bullish trade, it would be the opposite, a hammer candle followed by a close above candle within 3 candles. Now we have conditions and entry met. The next step is to set up our stops and targets, hence the CEST acronym. Stops, as you know, and as you heard throughout the video, are going to be 1 ATR below or above that shooting star or hammer candle. And targets for me, feel free to play around with these. For me though, are going to be a 1.7 to 1 reward to risk ratio. So that is how I break every single strategy I create or trade down in order to make sure it's as rules-based as possible. Now, as I was talking about a little bit earlier in the video, of course, any strategy you start to trade is not going to win every single time. The point of a strategy like this one and like any other strategy is to give us professional traders an edge that plays out over a long period of time. So right now, I want to give you an example of that by sharing the edge this specific strategy you just learned gives me. So let's do that with a calculator. I'll bring up my calculator, and for this specific strategy, my win rate fluctuates between 45% and 55% of the time. Let's take the low end of that, and let's say a 100 trade sample size is what we're going to go based on right now, okay? So out of 100 trades, what would that mean? That would mean I would win 45 of them. I'm going to multiply that by my reward ratio, which is 1.7. That means I have 76.5 there. How many trades did I lose out of 100? If I won 45, that's obviously losing 55 trades. So this gives what we call 21.5 R. The R in this equation stands for risk. So you take your 21.5, which is your edge, and you multiply it by whatever you risk per trade in percentage. Personally, I risk 2% per trade. So essentially, the edge that this strategy gives me is a 43% ROI over a 100 trade sample size. And I think this is so important because as a beginner, I searched and searched for what I thought was the holy grail. I thought I could find a strategy that would win 60, 70% of the time and have a massive reward to risk ratio. And after searching for that for years, I realized that does not exist, and that our edge is something that is small but plays out over time and can equal some huge gains if we do in fact let that edge play out over time by having good risk management that keeps us emotionless and by having a good trading mindset and good trading psychology. So right before we go look at all the currency pairs on my watch list and I share with you the areas that I'm looking at for possible day trades this week, I want to do a brief lesson on trading psychology and risk management, because the truth of the matter is that even if you have a strategy that provides you with an edge, that's about as useful as having a car and having absolutely no way to put wheels and tires on it. It's not going to get you any further ahead than you already are. Just having a profitable strategy, although that is very important, but having a strategy that provides an edge is about a third of the battle. The rest of that battle comes down to you understanding your own risk tolerance, creating a risk management plan that aligns with that, and working on your mindset and your trading psychology. So now what I want to do is break down a couple of steps you can take to master those two things, your risk management and your trading psychology. So initially, for your risk management, you need to focus on what's called risk tolerance. This is the amount of money you are comfortable risking every time you place a trade. And this number is going to be different for every person. To give you a good example of that, for me personally, I normally risk somewhere around 2% of my overall account balance every time I place a trade. So I have a $10,000 account, I'm risking like $200 every time I press the button. And I'm comfortable with that. I'm okay losing 2% of my account on any trade that I place. That's the risk involved, and I'm okay with it. And it makes me emotionless to risk 2% per trade. It gives me the ability to have a good trading mindset, to not move my stop up and down, to not get so fearful that I just exit the trade automatically out of that fear. It gives me the ability to put all of those emotions aside and be nearly completely emotionless when I risk 2% per trade. But that is my risk tolerance. And your risk tolerance may be completely different. This is something that will take a bit of experimentation. To give you an example of that, I had one of our students earlier today email me and say, Stephen, I started with a 2% risk. I found myself making a lot of emotional mistakes. I found myself moving my stop loss. I found myself changing my target and exiting trades completely because of how scared I was of losing 2% of my account. He then dropped it down to 1%. He noticed things got a little bit better, but for this specific student, he had to go all the way down to risking 0.5%, 0.5% per trade. So that would be like on a 10K account, risking $50. This was his risk tolerance. This is the number that made him emotionless, which is what you're looking for in terms of a risk management plan. In a risk management plan, the only thing you are trying to do obviously, is keep from losing money. But what you're really trying to do with your risk management plan is get to a number in terms of your risk per trade that makes you completely emotionless. It doesn't even matter if you lose that trade. You're not in a constant state of fear because that trade is fluctuating. So in terms of risk management, what is that number for you? And again, this may be something that takes a little bit of experimentation, but besides having a strategy that works, something else you will have to do is keep from letting your emotions control your trading. And one of the best ways to do that is to reduce your risk to a point that you are emotionless about the amount of money you're losing on a trade. Now, in terms of trading psychology, I won't take up too much more of your time on these topics, but I would highly suggest checking out all the videos we have on trading psychology here at the Trading Channel. And also, one of the major mentors for me in terms of trading psychology was Mark Douglas. So go find all the books and go find all the videos you can of Mark Douglas, who explains trading psychology, and the tips and tricks he uses are some of the same that I use. So I think that would be a great resource for you in terms of trying to master your mindset and master your trading psychology. So be sure to do that right after you watch the rest of this video. But now let's dive into all the currency pairs on my watch list, and I'll explain everything I'm looking for in terms of day trades this week. Starting off on the euro dollar, I am looking right at this level as a prominent level of resistance. So if price continues higher to this level, I'll be looking in this zone for a possible shooting star, followed by our confirmation, a close below candle within the next 3 candles. If prices push above this level, it will be my level of support. What I mean by that is if we don't get an entry here, or if I don't get an entry here, and I see prices push above this level, I'll then be waiting for a pullback to this level, and I'll be waiting for a hammer candle on the 15-minute chart, followed by a close above candle within the next 1, 2, 3 candles. The next pair we're going to look at is the pound dollar. On the pound dollar, I've already pointed these levels out because I thought it might hit them today. So here we have our level in green that I'm looking at for possible support, meaning if prices push lower, I'll be looking in this area for that hammer and confirmation to push prices higher. If we do in fact push higher though, instead of pushing lower, we have another zone of resistance looking left. And the reason is it is a major level of structure that's been tested multiple times. So if prices push higher, that will be the level I look for a possible shooting star in, followed by a close below in the next 3 candles. So those are the levels I'm looking at on the pound dollar. Next up, we have the dollar Swiss. Here on this pair, there's not really anything I'm looking at. If we push higher, I'm not really looking here for a short trade. And the reason is we've already made this big move up. I'm seeing this as a very likely scenario that we even continue higher and break this level. With that being the case, the next level I would look at is all the way up here at this black line around 0.9434, and price is not going to get there for a while, so it's not something I'm looking at over this next few days. Next up, we have the dollar yen. Here on the dollar yen, do you see a prominent level? Let's go with if price continues higher first. So if price pushes up, the prominent level I'm looking at and that I personally see is right in this area, something like that. So this is a level that if price continues higher, I'll be looking in for that shooting star with confirmation in the next 3 candles with a close below. So that's what I'm looking at if prices are going to push higher on the dollar yen. What if prices go lower? Well, if I scroll out here, really the next place, we've already come into the zone, really. I mean, if we look right here, this was our prominent level. Prices have come down and touched it and already had a push up. So I'm not looking here for another opportunity. Once we get to a level and we make a move out of it, I'm not looking for a second opportunity. So that's not what I'm looking for. I would have to go below that level all the way down to here, which is not very likely that we hit. I mean, I don't know. We may hit this level this week, but it's kind of doubtful. So this is going to be the next level I'm looking at, but we're not really paying attention to that because it probably won't get hit this week. Next up, we have the Aussie dollar. Here on the Aussie dollar, I'm not really seeing much, but I do have a little level of resistance right in here. We do have a level that has been tested not only as resistance, but also as support and as resistance multiple times looking left. So it is in fact a level that's been tested multiple times, meaning on the 15-minute chart, when price gets to this level, if we do in fact push higher, I'll be looking in that zone for that shooting star, followed by confirmation in anticipation for prices to move lower. Now, if I do not get that entry, I'm not placing a trade here on the 15-minute chart. I want to make that very clear. We'll take a look at a few more. Next up, Aussie New Zealand. The only thing that I could see is prices break above this level, and then I would consider that a prominent level. So I'll actually draw that out because it could happen. We have this level right in this area that's been tested multiple times. Here, 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 here. So with this being the case, if prices push up higher and then get a pullback into this zone, I'll look here for a possible day trade. But other than that, not looking for anything here on the Aussie New Zealand. Canada yen is inside of a zone now. Let's see if we actually got an entry. I might have missed an entry, but it was also the 5 p.m. candle, so it's not something I'd be interested in trading anyway. Did we get an entry here? No, we did not. We have a nice shooting star candle right here. And yes, a shooting star can still be green for my rules. Right here's a nice shooting star candle, but it obviously did not get closed below within 3 candles. Here is a straight line at the low of our shooting star candle. I would have needed to see a close below within 1, 2, 3 candles. Since that didn't happen, I have no trade here. Now, something else this is going to give me the opportunity to explain is that the shooting star candle must be the swing high. What I mean by that is this candle is the swing high, right? Let me hit play. Here we have a shooting star candle that is in our zone. But is this candle the swing high, the major swing high, as we've been pushing up? No, it must be the swing high. I'll show you the difference. If I put market replay on, you can see that this green candle is literally the swing high of the pullback as we're pushing up. It is the highest high since we've started pushing higher. That is what I mean. That is the swing high of the pullback, and that is how we're defining this. If we get a shooting star candle like this that is not the swing high of the pullback, I do not count it. But this obviously would be okay. So I'm glad that that actually happened because I'm glad that I was able to explain that a little further. Let's look at 2 more random currency pairs. We'll go with, let's choose the pound Swiss. Here on the pound Swiss, we actually have a couple of nice levels. So initially, I'm seeing this level of resistance over here, looking left. And also on top of that, if we push down, does this stand out to you? Is this a prominent level that whenever you look at the chart, you go, oh yeah, that's a major area of value? Yes, it is, right? So on a 15-minute chart, if price gets into this level, that's where I'll look for that shooting star with confirmation. If price pushes lower to this zone, that's where I'll look for that hammer candle with confirmation for possible entries here on the pound Swiss. So there was a complete breakdown of my entire day trading strategy and process as a 10-year Forex trading veteran. If you enjoyed this video, then I'm sure you would enjoy the TTC Forex University. So if you're ready for some more advanced training, feel free to check that out. It comes with a full mentorship program, meaning any questions you have, you can ask and it'll be me personally answering those questions for you. Obviously, it's a complete course, and it also comes with a Monday market breakdown video, the Pro Trader Report every Monday, and email analysis of trades I'm actually taking throughout the week. If you're interested in learning more details about that, all you got to do is click the top link in the description or go to www.ttcfxuniversity.com. If not, that's completely fine too. Just make sure you go ahead and subscribe. If you made it to the end of the video, make sure to leave me a comment and click that like button for me. I wish you the best of luck on all your future trades, and I'll catch you in the next video. See you soon.